Hello, welcome to Greg's Trading Place. The market did a gap and pump today, and I want to break it down for you. I'm going to talk about what happened in the market today, a little bit of a trading recap, then I'm going to forecast what might happen in the future for the market, and then I'm going to be breaking down some member tickers. I asked my YouTube members what stocks they want broken down, and so I'm going to break them down in this public video. Let's get right into the video. First up, we got a SPY over here having an up day of 2.64%, but actually we started the day with a gap down. So on the CPI news, it was slightly worse than expected, and the market was gapping down about 2.5%. Even in the pre-market from the high of this candle, it was really selling off. It sold off about 3.85%. That would be a monster down day. And I was up nice and early, trading the futures, grabbing some shorts on the SPY. My orders were rejected at the beginning, but you know, they eventually went through. So starting off the morning nice and green on the SPY, and then SPY doing a nice little consolidation. It's really kind of deciding which direction to pick, and eventually just not a lot of volume. Sellers really can't get the SPY to drop lower, and we're already extended into support. So if you take a look at this, not really so much support, but we were already oversold into the gap down. It was just a recipe for a bounce because look, we also have bullish divergences. What do I mean by that? Well, right over here, I've got the money flow index up. And on the money flow index, this is just like the RSI, but it accounts for volume as well. And of course, there's oversold and then there's overbought. But look, the money flow index made a positive bullish divergence on the gap down that hints towards a rally. Did it have to rally? No, it was just more likely to rally today than any other day. If we look at the 4-hour time frame, look at this crazy whipsaw. Overbought money flow, market sells off. Oversold money flow, market doesn't bounce, but it gets a little bit lower. Okay, we have the bullish divergence. SPY rallies. Another thing that we noted early in the morning was that the VIX was not gapping up when the market was gapping down massively. When you're selling off that much, you'd expect fear to break out. If fear isn't breaking out, again, we talk about those little hints that we get. It was hinting towards the market rally. Of course, if I knew exactly how far the market was going to rally and it was going to rally for sure, I'd be all in. We're going to talk about that in a little bit, but either way, a good day trading futures. A little bit tricky in terms of just grabbing the longs, but you know, we were just breaking out, pulling back. Nice good trends over here. Nice good flag break. Flag break. We grabbed a call option right here. And then as we extended through in just about 2 minutes, taking a nice good $69 profit, which was absolutely hilarious, but it was just taking profits as the implied volatility was spiking. And it was also a great risk to reward. If we take a look at the setup right over here, nice good little pullback, and then we consolidate just a little bit over here, and the entry is nice and tight right over there. And then my stop loss is right underneath here. I'm risking about $10 to $15, and we just get a nice good pump. The implied volatility goes insane. At least I thought it was insane at the time. And then TP as soon as we start to get a little bit extended after the breakout. So a nice good move, but obviously I could have held that contract for quite a bit. And it's always a tricky thing that we go through, you know. Do you want to take the quick profits or do you want to try to hold for the meat on the bone? But if I copy this 355 strike call, this is the power of options and where we are within trends. So there we go. You can see that SPY call trade right there. And I was like, yeah, that was cool. But then look at this. I got filled at 2.6, so $260. But look, by the end of the day, it hit a high of $1,283. So absolutely amazing short squeeze by the SPY. We even were talking about the SPX. SPX has 0 DT options. And what's the difference between SPX and SPY? Well, SPX is the cash index, while SPY is the overall ETF. And the cash index, this actually has daily options each and every day, which is absolutely insane. The volatility on these are crazy. Do not trade these unless you're really, really experienced or really, really good with SPY. But if we check today's options over here, the 3650 strike call. If I copy this, take a look at this. This is the title of the stream today. $5 turns into $3,600. I repeat, $5 in the morning, the very same day turns into 3.6K. That shows the power of the volatility of this market. And look, you can see some of the moves down too. Look, if you bought it at 3,000, it's all the way down to only $600 by midday. So be careful with the volatility on options. But we were just joking on stream. If we ever have a time machine, we're going to remember this date, October 13th. Thank me later. If there's ever a time machine and you can go back in time, remember this day and just load up on the 36.50 strike call. $5. As much as you can put in, boom. Almost just a casual 17,000%. So enough shenanigans. So traded some SPY calls, but also I took a SPXS put. So if you ever want to trade the SPY, but you want just a little bit cheaper of contracts without really going too far out of the money, check out SPXS. I grabbed an SPXS 30 strike put right in the morning, and the 30 strike put, a lot less volatile, but the spreads are a little bit wider. I didn't have too much problem getting filled, but either way, got filled at $1.20 and out at $1.80. So right about here. So I got filled just before SPY's massive breakout, and that's fine. It's one of those things where you made some good profits. So today was a solid green day, trading futures, trading options, all that good stuff. But it could have been a blowout green day if we just held for that extra little gamma squeeze. And that's why we're breaking down the SPY, you guys. We break down the SPY because correlation is high in the market. So if the SPY is green, most stocks are going to be green. If the SPY is red, most stocks are going to be red. But I just wanted to talk about the gamma squeeze as well. So that's why the market pushed up as high as it did. People have to start hedging, or the market makers have to hedge. Shorts have to start hedging when you really just start getting blown up to the upside. I mean, this is a 5.5% rally in one day from the lows. So if you bought the dip in the morning, you did very, very well. And we'll actually allude to that in a little bit. So call options are cool. Futures, I still need to just use the wider stop. And I do realize that all of this is part of the plan. So the reason I'm trading with tight stops on the futures is because there's a certain strategy to doing these evaluation and performance accounts, but then you'll get more leeway as you get further along your journey. But at the beginning, you want to be defensive because you don't want to hit the trailing threshold. You don't want to hit the trailing drawdown. And if you don't hit the trailing drawdown, you're good to go and you can actually start to get that funded account. So the goal is not to be on offense because then you're risking the account because you have to, the more aggressive you inherently are, the less pullback that you can have. And so those wider stops don't really work at the beginning. So my overall strategy is a little bit different. I trade futures a little bit different than I would at each point throughout the journey, if that makes sense. So at the beginning, I like being defensive. And then as I get a little bit more and more of a cushion, that's when I like to be more aggressive. You just don't want to get too aggressive and give it all back. That's kind of the whole point. So super good day trading. And now I'm going to get into the member ticker breakdowns over here. So shout out to you guys if you're a member. I really appreciate it. But we got Serpa over here asking about Coinbase. So this is the first time I'm looking at it at the end of the day. So let's just break it down, top-down analysis. Big downtrend for Coinbase. So just basically running a regression line. What's the line of best fit to the downside? Probably something like that. It probably looks like it might want to stabilize a little bit. Sideways is the most likely way for Coinbase. And correct me if I'm wrong, if I broke this down in another video or not, but either way, we got lower highs. And actually, Weenie Trades Trade Alert shorted Coinbase last month right there. Bear call credit spreads, selling the 83 calls, boom, money. But besides that point, Coinbase, it looks like it could break out if it gets and holds above this like 72 level. So mark your calendar, get above and hold above 72. And it may want to test the top end of the range or try to fill maybe this gap right over here, 77.26. Sometimes gaps can just be a magnet. I'm not saying that all gaps have to fill or anything like that, but keep an eye out for that level on Coinbase. Otherwise, there's a nice flat bottom on Coinbase. Underneath today's low is probably a big breakdown. But even then, you'd probably want to grab the retest. So I just expect sideways action on Coinbase. Nothing too crazy. If we double check the option chain over here, coming into next week, we got about a $9 expected move. So we could see Coinbase at about 78, or we could see Coinbase at about 60. So basically right back down to the lows next week, or we could get a little bounce and maybe go as high as 78. The volatility seems a little bit too high for that 1 week on Coinbase, but Coinbase is a decently volatile stock. So maybe iron condors on Coinbase or selling the 78 strike calls with like a credit spread, something could be a way to potentially profit off of Coinbase. In terms of it being an investment, I know Google signed with Coinbase. They did some deal with Coinbase. Yeah, I would still wait on crypto land, but there'll be some better setups in terms of Coinbase, and certainly much better investments. Invest in yourself instead of investing in Coinbase. But again, none of this is financial advice. I'm not telling you guys what to buy or what to sell. I'm just analyzing some charts for you. Let's check out Nvidia, NVDA. Serpa is asking about. Nice, good move. I said 106 was a dip buy today for Nvidia. We got as low as 108, so that was just the opening range breakout. Shout out to Naomi. She's a really good Nvidia day trader. She's just slamming the size, 10 contracts, boom. A nice, good volatility move to the upside. From now until tomorrow for Nvidia, we got a $3.80 expected move. That seems about fair priced. Into next week, we have a $9.60 expected move, so that also seems fair. If we take a look at the daily time frame, I'm not sure that Nvidia's troubles are exactly over. It's difficult to say whether the overall market was capitulation or not. It doesn't look like capitulation to me, though. We kind of need a little bit more selling. I don't know if we wrung out enough buyers just yet. So this could just be another wave up in the downtrend. Maybe we just want to spike out some shorts. Based off this type of, wave pattern, this puts Nvidia at like 133. And then it likely should find some resistance and likely zigzag on lower. Otherwise, if you can close daily above that, maybe you could get a little bit more of a squeeze. But I'm going to be very, very patient before aggressively buying this market. I think I'll have a lot of time to make that decision. So that's my thoughts on Nvidia. Fairly priced expected move. Again, great liquidity. We got a little hammer candle on the weekly time frame after grabbing the liquidity down here. So what do I mean by that? Well, this is a support level. Support, support, support. We spiked that support level. There's probably a lot of stop loss orders on the weekly time frame right there. They grab the stops, boom, snap it back higher. Because that's where all the liquidity is, and that's where you can get the best deal as a big bank or an institution. So nice move on Nvidia. Yeah, again, I wouldn't expect it to really get much higher than 133. So that's NVDA. Let's check out Tesla. Tesla over here. Tesla, similar thing. Just, I don't know if we really broke it or not, but either way, Tesla, another good reversal. Only up 2% though on the day. This is actually weaker. If Tesla is extended up to like 233, I'm going to short Tesla, and by shorting Tesla, I'm going to probably grab and start nibbling some TSLQ. I actually took some profits on TSLQ today. This was alerted to members that it's likely going to break out right over here back when it's at about 46 bucks. So nice, good move to the upside of about 16%. So nothing too crazy. This is a reversal candlestick. And look at that. That was just our prediction candle. I haven't even really drawn on it yet, but TSLQ probably looking pretty good after a few more up days in the market, if there are. Otherwise, I can be very picky with the entry. But in terms of Tesla, longer term, probably coming to like this 180 level. But now we might have like a bounce, potentially for the rest of the month. I don't know just yet. I need to see a little bit more data. One green day is cool in terms of like just like trends and reversing trends, but I really need to see more action before making a confirmed thesis. Again, we can see money flow index. Look at this. Tesla opening range breakout, money. Boom. Nice, good stuff. So that's just kind of my thoughts. Looks like it might continue the bounce up to 230. Otherwise, we might go sideways. I would be very surprised if we just flopped these green candles all in one day. However, it is a bear market, and in bear markets, the rallies are short and steep. And in bull markets, the drops are sharp, but then it's like a slow grind up. We might have like a sharp spike up and then something like a slow grind down on a lot of stocks. So keep an eye out on a lot of these stocks. Let's check out AXP, American Express. Shout out actually, let's get to AMD real quick. AMD, going to be very similar analysis to Nvidia. And look at that, wave pattern down, wave pattern down. Weenie Trades Trade Alerts was shorting AMD when it was at about 98. So really big move down since that level. AMD down 43%. Put spreads, puts, you name it. Wow. 62.75 is going to be the next area of resistance for AMD. And again, this is a tricky one because it's a kind of like a megaphone type deal where we got lower lows, but we also got higher highs. So maybe we still run into some resistance even if we do make a higher high. And that's the trickiest part of these patterns. And you got to speculate whether we're going to break that slight higher high and get a little bit more vertical, or if we're just going to grind along that line and then fail. So these patterns are pretty interesting. There's if we break down underneath 57.50, we could be starting to head lower on AMD. I would stay very patient on this stock. I think that AMD is more likely to probably come down to this like 35 area than to go all the way back up to the highs. But time will tell. I would still say that like we could also just go sideways for the whole month of October. People forget that sideways is a way. And I forgot it certainly yesterday. I mean, I could recognize it at the beginning of the day, sideways is a way. But then towards the end of the day, after the Fed minutes, I was looking for that breakout or that breakdown, and we just really didn't get it. So pretty interesting stuff. I would wait for an extreme dip buy for AMD, but short term, anything can happen. Short term, anything can happen. Yeah, wouldn't be surprised to get even a retracement all the way up to 71. And that would still just be a big bearish move. But maybe we can get some new trends after that. So if you want to buy these stocks, you can buy it right now and put your stop loss underneath today's low, but that's a lot of risk, or that's at least a wide stop, and I don't know if the risk to reward is really worth it. As we were streaming during the live stream, I was saying, you know, the trend is down overall, but today the risk to reward is definitely the long. And it kind of was the long the past few days, but you can see that the long was fading out because buyers failed to make higher highs. So always just kind of know, where are we at in terms of buyers and sellers? Where's the liquidity at? Where do the big boys really want to move the market? These are all really important things to think about. So let's check out AXP now. Thank you, Joseph, for asking about AMD. Let me know if you have any questions on that. AXP, American Express, big up day, up 4%, so a little bit stronger. Pays a nice dividend of 52 cents, and we also have earnings on the 21st. American Express earnings, oh wow. So next Friday it lands right on the earnings day. Plus or minus $10 is the expected move. So 152, 132. That seems about right. 152 is the resistance. I'd expect that to hold underneath 152. And then 132 is the support. Could do potentially a put credit spread, selling the 132 strike puts expiring that day, or set up something like a butterfly. But the bid-ask spreads are a little bit wide on American Express. But again, this one looks like this could push a little bit higher and potentially make a higher high and take out this cluster up here, potentially up to this 148 level. From now until tomorrow, American Express has a $4 expected move, which I do believe seems about fair price. I think it's a little bit high in terms of implied volatility. But 148 tomorrow would be the area to potentially go short or take a mean reversion trade. Otherwise, if you wanted to go long, I would check out something like 136 tomorrow. So that's American Express. Let me know if you have any more questions on that. Let's check out FAS. Similar thing. Okay, this is a financial bull ETF. Oh yeah, okay. So this is the bullish financials. I believe JP Morgan reports earnings tomorrow. JPM. Yep, they do. Yep, 10:14 before market. So I'd be really surprised if they were good. But again, the market reaction can be different. And again, I don't want to really break down FAS. I'm going to break down XLF, the financial sector. XLF, big green day at 4.1%. Let's see if financials can't get up to this like 33 level. But again, we have a lot of space for higher lows. That's kind of the whole point of these fat green bars. However, it's also a bear market, and we know that bear market rallies are short-lived. So we could flop right over tomorrow, or this rally could extend for a week. So we'll have to update that at Weenie Trades Live. Again, if we do retracements though, golden fib right over here, measure from low of the day to the high of the day. The golden fib is 38.2. On XLF, that's about 30.8, 30.84. Could be a potential dip buy for continuation. Let's say we're gapping down. Maybe you expect the shorts to still be under pressure. You could go ahead and buy XLF or FAS at that point when XLF hits 30.84, or if it. And Parker's yowling. Parker, come here. Parker. Oh, I'll have to give him some treats after this video. Either way, XLF, that's kind of what I'd be looking at. If we come underneath that, there is a potential that we reject. So if we close hourly underneath 30.84 on XLF, there is a chance that we could be rolling back over. So again, if we fail to hold support levels, we can just dump straight into a lower low. We probably don't do it all in one gulp, but probably low, lower high, lower low. And this is all stemming from like Elliott wave, just measured moves, you name it. But that's my thoughts on XLF. Between now and tomorrow, 83 cents is the expected move. And into next week, $1.50. Look at this. But the October 28th, you get a better bang for your buck if you're going to buy options. Because look at this. Only $1.85 is the expected move on October 28th. So you can, if you're going to buy a call or buy a put, buy those calls or puts on the XLF for October 28th expiration, because that's a good bang for your buck. I wouldn't be buying options tomorrow or into next week. You could actually potentially even sell the next week options. So I always try to look for these little money pockets that we can grab on the option chain. Always super cool to do. Let's check out Costco now, COST. Costco, again, we talked about Costco being range bound, and there we are, range bound really. I said Costco iron condors above 420, Costco iron condors, sell the 520. We're probably just going to stay sideways, dead sideways on Costco. So not a lot of opportunity unless you want to sell some credit spreads, but the spreads, the option spreads on Costco are a bit wide. So I don't even know if the juice is worth the squeeze. Pays a good dividend, 90 cents right over here. So yeah, not too shabby. Expected move for Costco, $20 between now and next week. Again, if I were to buy options, I would take a look at the November 4th. And then otherwise, I'd be selling options, especially maybe tomorrow and next Friday on Costco. So that's COST. Let's check out Uber. Uber had some bearish news that one day right over here. By the way, Weenie Trades trade alerts shorted Uber right there at about 33.50. We did actually grab the October puts. I took profits like on this next down day. So, I want to keep us in cash when we're in Weenie Trades trade alerts. But either way, cool stuff. Uber, range bound. I'd expect Uber, if it can break above and hold above 26, to potentially fill a lot of this gap. But I don't expect Uber to really get above 27.50 for a very, very long time. And so Uber, we've got earnings on November the 1st, 7 a.m. Central. Uber's got a liquid option chain. So if you're new to options, try trading Uber, paper trade Uber, or trade Uber small size on your account. I think that could be pretty cool. In terms of options, yeah, I would just, the way it looks like a lot of things sideways, iron condors are the way. So yeah, 27.50, going to be some resistance. Cool. Breakdown underneath support underneath 24.20 for Uber, unless we just stay range bound, which is the most likely scenario based off these patterns. I don't think any of these stocks are really great buys. I don't know what Uber's profit margins are, but I can't imagine that they're super good. As with most things, we got decelerating trends. So lower highs, steeper lower highs. Are we going to take out the steep lower high and come up into the gap window? Maybe. There's a nice confluence of resistance at that 27.50. So think of that as like the wall for Uber. And in terms of support, probably doesn't find support until something like 22. Maybe. It might even take out those lows by a bit, especially if this is just a big bear flag where we drop and then we consolidate for a bit and then we have a continuation to the downside. So that is Uber. Let's check out Bitcoin /BTC. I kind of alluded to this with Coinbase. Nice, good flat bottom, broke, and then spikes up. Good volume as well on the weekly time frame. Bitcoin. And if you guys didn't see, Romulus made public YouTube videos talking about selling Bitcoin. Dump the Bitcoin, 60K. Pretty much the top. In fact, that basically is, that's the top. Descending triangle right over here. If we take out this week's low, look out below for Bitcoin. That could be the liquidation flush. Otherwise, we could have a short-term rally up on Bitcoin, maybe as high as 27,000. That'd be a really big move. That'd be a 38% move. I'd expect Bitcoin more likely to, again, stay sideways. Staying sideways. It's the name of the game. So that's really all I have for Bitcoin. Long term, maybe it'll be good. I'd rather wait. So Bitcoin, I'd probably give it 3 to 10 years before even buying. We can even then dollar cost average. Bitcoin, like this, like 10 to 13K is like a great value. So Bitcoin 10 to 13K, good value area. But I don't even know. I'm not going to buy any breakouts on Bitcoin. I want to see Bitcoin's volume really take off. And again, I'd actually rather choose Ethereum /ETH. That sounds a lot better. Ethereum. Yeah. So just my thoughts on crypto land. And then let's check out LCID, Lucid. Lucid potentially for a short. Yeah, and look at this. Bear flag drop. This is from the weekly time frame. So first of all, nice breakout right over here. Nice volume increase. Gets a little bit extended. Put in a lower high compared to this high. This was, gosh, what was this? What was this one originally called? CCIV. So the CCIV scam day. The day before it dropped, I warned, please be careful. I would not be trading this stock. Next day, boom, absolutely gets destroyed. Either way, lower high pivot, lower highs, lower lows, breakdown, drop, bear flag, drop. Bigger bear flag, bigger drop. So now we're in the drop phase. I don't know if Lucid's really the best short. That's the only reason. So yeah, we got a channel, a zigzag down. I think this one's going to be a trickier one to trade. Also, how much meat on the bone is there? There are earnings, November the 8th. Expected move into tomorrow is 67 cents. Seems about fair. $1.50 next week, October the 28th. Better deal for buying options. And November the 4th, $2.40. That seems about fair. So a lot of options are fairly priced. I'd expect Lucid probably stays underneath 1440, but it can continue its little wave down. Ask me about Lucid at Weenie Trades Live. And then there's high volume on the 13.5 strike call. It depends on the day as well. But either way, Lucid 13.5 would be a break above yesterday's high. See, like Lucid should have taken out today's high. Lucid's weak. Lucid's down on the day when the market is up. I'd ask myself why. It makes me think that Lucid's a loser. Nothing against the stock or the company, but that's just how I like to perceive it. And so if it's getting battered down when the market's throwing a big bonanza, throwing a party, I'd ask myself, why is Lucid not doing the same? So still bearish Lucid, but the trade location is going to be difficult. And how much meat on the bone is there? That's always something that we got to think about. So I think there's better stocks for squeezes. And even like ETFs, like we talked about XLV being a relatively strong name. When the market was having its big down day, XLV was not. XLV was actually green on the day. XLV kind of going through like a chop day, just like SPY. And today, XLV going off. So I would stick with like stronger sectors and not really try to play the squeeze game with a lot of these stocks. Because think about it, if the buying power is low and the liquidity is lowering and lowering from the Fed raising rates, squeezes are less likely to happen. Doesn't mean they won't happen. They're just less likely to happen. So that's what I have in today's video. You guys, join Club Romulus. Romulus has been warning us about the market. He's been on point. How would you guys feel if you guys had double-digit returns like we do? Club Romulus, double-digit returns, over 90% accuracy. For me, I'm like at 95% accuracy with Acta and Aquilas. So he is really on point with his stuff. Let me know if you guys are interested in joining Club Romulus. I'll leave a link in the description. Let Romulus know you came from Weenie Trades. Weenie says hello. We all love Romulus. We all love hanging out with Backpack Trader. It was a great trading day today, you guys. Thank you so much for tuning in, hanging out, having fun. It's days like today that make trading really worth it. And it just shows the possibilities. Again, I'm not saying that we buy that SPY call for $5 and sell it for $3,000, but maybe we can hold our trades a little bit longer. Catch it for the squeeze. Do the stop and walk where you just enter in, put your stop loss underneath the low of the day, and then just walk away. Nice, good squeeze. Jeez, SPY looking like a penny stock. All right. Thanks for tuning in. See ya. Play defense on those futures. Oh, this is going to be an over 30-minute video. Wow. Peace.